Have you ever noticed that the more trading knowledge you get, the worse your trading gets? Look, you're not crazy. I went through the same thing. And the problem is that most traders keep stacking information instead of gaining real insight. And in that process, they miss the only thing that actually matters, where smart money is stepping in. And today, I'm going to share with you the exact strategy that completely transformed my trading. I call that strategy the trap and snap. And once you understand how it works, you will never get trapped in fake breakouts or fake bounces again. Instead, you will know exactly where to enter before the real move happens with confidence and conviction. It all happens on the 1 hour chart. It's stupid simple, beginner friendly, and the best part, you do not have to babysit your screen the entire day. This is the exact strategy that took me from a stressed out scalping freak to a calm and confident trader who is taking only a few high quality trades per week. But you know what? This strategy didn't just work for me. It's working for people who started trading live with us in our trading community. People who are about to give up on their trading. People who finally started seeing results week in, week out. By the way, if you're new here, my name is Silvia and I've been trading for 12 years now. And just like most new traders, I used to stare at the 1 minute chart all day long, chasing every green, red candle, every breakout, just to get chopped into pieces by the end of the day. I wasn't trading with a plan. I was just reacting to price, fear, FOMO, and lagging indicators. I would take 20 plus trades per day and I would end up the day completely frustrated, drained, and exhausted. And the worst part, I did not even learn anything from that. I just kept hopping from one day trading strategy to the next, reacting to the same impulsive decisions and hoping for different results. The turning point happened when I realized that the market isn't random, it's structured, it has a rhythm, and smart money moves in and out with intention and leaves trails on the chart. That's exactly what the trap and snap strategy helped me see. Once I started focusing on the 1 hour chart and identifying trap zones, I finally stopped getting faked out randomly and stopped out for no reason. And the result, I started seeing green week after week, month after month. And today, I'm going to walk you through my 3-step process of the trap and snap setup. And I'm also going to share with you a live trade that I took live in our trading community. A trade that got me 1,000 points move on the NQ futures. Honestly, this setup changed my trading forever. No more chasing, no more scalping for crumbs. Finally, high quality big trades with conviction. Step number 1, determine the big picture and the bias. For that, we want to start with the daily chart. We're going to align the most important zones from the daily chart with the lower time frames. And I'm going to show you how to do that just in a moment. But for now, I want you to remember, regardless what time frame you're trading, 1 minute, 5 minute chart, 15 minute chart, we always want to start with the daily chart first. Why? Because this is where big money operates. Institutional traders don't trade off the 1 minute chart. They use the daily time frame and daily levels to build positions around zones that have held for days or weeks. Look, I'm gonna be honest with you. The first time I started trading, I completely skipped that step. I would open up the chart and I would see low quality, low time frame candlesticks, and I would think this looks like a decent breakout, and I would enter a trade here and I would buy at that zone and put a stop loss underneath. But typically, here's what would happen next. Boom, got stopped out, and I would be like, what the happened? I thought everything is bullish, everything looked like higher highs, higher lows. Why did I get stopped out like that? And I would blame myself and the market, but the truth is I had no context. I didn't understand what's happening on the big picture and what's the current market cycle. The daily chart shows you where big money is positioned and where most likely stop hunting might happen. In other words, retail traders put their stop losses around support and resistance areas. And institutional traders know that. They run the price just to stop everyone out, swipe liquidity entry and reverse the price in the other direction. This is why these zones act as magnets. Let me show you exactly what I mean. So this right here is the NQ futures and the daily chart. I've mastered that instrument over the years and I'm totally obsessed with it. I watch it pretty much 24/7. So I want you to remember this chart because this is the exact chart and analysis that I used to catch this 1,000 points move on that instrument live in our trading community. So the first thing we want to start with is determine the current cycle, the current price action, and think of what can potentially happen next in terms of probabilities. As we can see here, we are in a very strong and nice uptrend, higher highs, higher lows, but I want you to observe this recent price action here. You see how the momentum starts fading. The size of these recent candlesticks right here is much smaller compared to the size of these candlesticks. This means there are no more big buyers that are buying around this zone and pushing the price higher. Also, I want you to pay attention at the RSI. This instrument has been overbought since mid-May. This means a correction is due. So because of that, and because there are a few weeks here over the last few days, I'm not going to look to buy in this case. I want to look for a short opportunity because most likely the market is going to reverse, swipe liquidity, and push the price a little lower. I don't want to be the one who is buying at the high just to get stopped out and give my money to the institutional traders. Now that we know what most likely could happen next and we're using this probability in our advantage, we want to mark the most important recent liquidity zones. In other words, these are the zones where most retail traders would put their stop losses. So this right here was the previous high and it was tested once, and this green candlestick slightly broke above but reversed lower. As we can see, these are two John Wick candlesticks. In other words, these wicks indicate that there are more sellers stepping in, pushing the price lower and not allowing bigger buyers to overtake. Therefore, again, I want to mark them because I'm going to use this area for potential short entry on the lower time frame. Also, I'm going to mark the previous lows because this is where most likely buyers could step in and take over. The reason we mark these zones, the highs and lows over the last few days, is because these are liquidity zones and these are also trap zones. This is where most traders get trapped in the wrong direction, not knowing why this is happening. And now that we know what can most likely happen next, and now that we have a short bias, we want to switch on the lower time frame using these daily zones, premium zones, to enter our trade. So now we're on the lower time frame, the 1 hour chart. I personally love the 1 hour chart. It gives me much more accurate and cleaner setups, and the best part, I don't have to babysit my trades and my screen all day long. And these three lines right here are the lines that we drew from the daily chart, our premium zones. And look at these two big green candles. This is a typical sucker move. For those that don't know, what exactly is a sucker move? A sucker move is specifically designed to suck new traders in and take their money. Institutional traders know that amateurs are chasing price and breakouts, and they use that in their advantage to reverse the price and push it lower. And unfortunately, I had to learn that the hard way. I've chased so many breakouts, and of course some of them worked, but the majority of the time I would just get cut and chopped into pieces by the end of the day, not knowing what happened. So this is the part that I called trap of this setup. It's trapping retail traders in, and then again, institutional traders are just waiting for that to reverse and snap the price on them. And this is the exact setup that we're going to be looking at. Now I'm going to hit the replay button and show you exactly what I was looking at and how I entered and managed that trade. And as we can see right at the market open, which is, by the way, 6:30 a.m. PST for me in Las Vegas. Yeah, I know this is really early. We see a little bit of a breakout here. So if you longed that and you chased that breakout, you probably feel good about your decision. It looks like the market wants to continue further higher. The daily chart looked bullish, so you feel pretty good about yourself. But remember what we discussed. This is a typical trap situation. Big institutional buyers can snap the price at any moment. Therefore, we made our plan. We saw that the candlesticks are getting exhausted on the daily chart. We saw 2 wicks on the daily chart and lack of momentum from buyers. Therefore, instead of chasing the breakouts, we are going to be looking for a short entry. Unfortunately, most traders that are new will continue chasing and even buy into this green candlestick right here. But we know that this is another trap. Instead, we want to short. So a short position can be opened either if the price starts breaking the lows here, or right away right here using this area, the top of the range, as a potential stop loss area. Now, I'm going to hit the replay button and I'm going to place a short order the exact same way I did live in our trading community. And next thing you know, snap, the market goes straight to the downside. And the people who were sucked in into breakouts here now are completely underwater, not know what's gonna happen next. So now the next question for us is, how are we going to manage our trade? And the answer, the daily chart. Remember, we drew our zones also on the lows of our candlestick from the daily chart. And these are our potential support areas and potential areas where more buyers can step in and might start reversing the price to the upside. So we want to observe live the price action. We want to know what's happening, who is in control, and depending on the price action, we can decide the areas where we can take partial profits and keep some of the position to be able to maximize a big move. Now, I want you also to understand that these results here are not typical, and I really worked hard to get to this point, and it took me 12 years to develop this skill. So if you're trading, just remember all of that doesn't happen overnight. Now I'm gonna hit the replay button again so that we see what happens next. As we can see, the market was trying to bounce off this support area. You see this green candlestick here with the wick. It looks like buyers were trying to step in, and as soon as we broke above this candlestick, sellers immediately stepped in and continued to push the price lower. This is a typical dead cat bounce, or some people call it failed bounce. Regardless how you call it, you want to observe the price action. If you're buying a wick like that, you want to see immediately a continuation to the upside, meaning the price should immediately continue further higher instead of lower. So this is showing you the sellers are not done yet. Therefore, I'm going to keep holding my position. Now, a way how you can manage that trade depending on your size is you could exit partial of your position around this zone, because again, these are the two zones that we drew from our daily chart, and these are the zones where potential bounce can happen. And sometimes some of these bounces, especially on the NQ futures, can be really vicious. That's why you want to book profits on your way down. If you're using smaller size, you might just observe the price action and see where you end up and trail your stop. Now I'm going to hit the replay button again so we can see what happens next. As we can see, we have another green candlestick, another attempt right here of buyers to take control. And this happens right around this zone, the daily premium zones that we drew. These are the daily lows from the last few days. And now we want to observe if buyers are able to take control or sellers will push the price lower. As we can see, another dead cat bounce, another fake bounce here. Sellers are still in control. You see a lot of red here happening. And now right here, you see a little bit of a green. Again, another attempt of buyers to take over, but same thing here, sellers continue to push the price lower. And so if you are in this type of a situation, you can start looking into another profit-taking zones. And in this case, you see that low here. This is also a good and potential zone to take some of your profits or even close your position. Also, you can use the RSI if you wanted to have a little bit more guidance here, because as we enter the trade, take a look. The RSI was overbought and now we're heading towards the oversold area. Therefore, you can start looking into profit taking. We see here a little bit more red, green, red, green. The price continued further lower. And if you took another partial here, now you're looking at the next possible support zone. So that is the low from here. And this is another potential take profit area. We also see here a little bit more wicks, and the price starts to look a little bit more bullish. The second time, one green candlestick followed by another one. Therefore, I'm just gonna go ahead and close that trade. And this is exactly how I do it. I normally like to scale in and out of my positions. I use the support and resistance areas for that. And as we reach an important liquidity support zone where buyers could potentially take over, I like to scale out of my position and take some profits on the way down so that, I book my profits. Because sometimes the reversals, again, on the NQ futures can be really vicious, and you don't want to just turn a nice winning position into a losing position or give back some of your unrealized profits. For me personally, that's something I cannot handle good at all. So the key lesson here is how to identify what's happening on the big picture. Who is in control? What's the current cycle? What is the current price action? And based on that, determine your probabilities. What can most likely happen next? And then and only then go on the lower time frame to look for an entry. So I hope this video helped you a little bit with that, and you can use this type of strategy on any other asset. This is not just for the NQ futures, you can use it on any asset. And by the way, if you haven't subscribed for our weekly gains guide, we are sending each week totally free our zones that we're looking on the NQ futures, ES, RTY, and YM, and we're mapping the plan for the week. It's totally free. The link is in the description below. Thank you so much for watching, and I cannot wait to see you back on our channel again. Bye for now.